Today we have a very prominent personality and one of the youngest builders. Thank you for coming, Ajitesh, and I'm very excited for this episode today.
Hyderabad mein real estate prices have grown anywhere to the tune of 12 to 15%, particularly in housing segment. After some point, it becomes sort of unaffordable.
I want to know if there's other industries that are contributing towards the growth or towards real estate.
Let's assume from an income hierarchy, right? So IT job is the topmost. People are earning around 1.5 lakh. Next, you have the pharma sector. Good amount of jobs get created in that 60,000 to 80,000 range. If you look, all the iPhone AirPods, most of them are now manufacturing has begun from Hyderabad. When it's completely finished, they will be employing 1 lakh people.
Trump announced his new tariff.
Yes, it is going to have decent amount of impact on the IT services. I'm somebody who did one-time payments and then we stopped. So I have the life cycle understanding of one-time payments. Probably when doing it, I also did not know, to be very frank. Thank God and thank little bit of our planning that we had funds provision. So even if sales didn't happen, we built it out. Imagine I didn't have that money. I would also be sitting and crying. Because if anything, you're getting too less from the market. If any deal is too sweet, risk also goes up. You remove ORR from Hyderabad is gone. The next 10 years ka story, I think predominantly is going to revolve around RRR. The minute you build RRR, you're unlocking a lot more real estate value. No? And next interesting thing to watch out is also AI city. Imagine a city level thing where a lot of AI related development is happening in that place. The best of the global talent, not just nationally. So Bangalore has more high paying jobs than any other city in the country because a lot of tech startups are coming from there. That is the only chink in the puzzle we have to solve to beat Bangalore, because all other things are ahead of them. I think now it's a competition of attracting more talent. City scale, HR ka problem hai. Less number of houses, you'll think less traffic. No, less number of houses, matlab your houses spread over vast amount of area. Matlab people have to bring out their car because everything is so dispersed. More cars on the road. Hence more traffic, and you, the buyer, will have less space because prices go up. Hyderabad's biggest advantage is unlimited FSI only if your land is abutting a 100 feet road.
Hi everyone. Today is going to be a very insightful episode. I'm very, very excited. I'm sure end of this episode, you guys will have a lot of takeaways. And today we have a very prominent personality and one of the youngest builders. Thank you for coming, Ajitesh, and I'm very excited for this episode today. I'm very, very interested in how your journey, has come through, and because you grew really fast, and I want to know what you did and how did it happen.
Firstly, thank you, Megha. I'm super excited to be here and talk to you and probably share some insights with your subscribers. So, Megha, basically, I'm a second generation real estate entrepreneur.
Okay.
I'm a second generation real estate guy and a first generation entrepreneur.
Okay.
Right. So I come from a real estate family background.
Okay.
My father was one of the founding member of Ashoka Builders, one of the oldest developer in the city, established in 1989.
Oh, this I don't know.
Yeah. So we should have a lot of dinner table conversations around real estate. So that was something which sort of we grew up in, that environment.
So part of your DNA.
Yeah, it's part of our DNA. Then after I did my undergrad, I came back from the US and I worked with my father for 3-4 years in my first project. And then we had creative differences.
Okay.
Right. And then I moved out and I along with my partner Anil, we set up ASBL in 2017. Right. So regarding to I would say the quick our growth being fast. I would say, one, I got lucky also, because naturally by lucky, I would say I've got the backing of my father.
Yeah.
Right, to start off with in early days. Yeah. And second, because I was exposed to this business from very early age, I knew what went wrong. Let's see, every 10-15 years, the market changes. By market changes, what I mean is the direction the city is growing changes, the product changes, the buyer changes. There's several such changes, right? So I'll share you one tidbit. My father, in his career spanning over 35 years, right, they have done only joint developments as a structure. Joint development mein kya hota hai? You as a developer go to the landowner and you're leveraging your expertise, right? And the landowner gives the land, because of which he or she gets like 30-40%, developer gets the rest of the inventory. You share the inventory, right? Yeah. His entire career was in joint development model, right? And if you look pan-India also, that's a good model, right? 80-85% or 90% of the market lands which come into the market come into that structure.
Okay.
Now, because I was exposed to this from very early on, I knew what were the pitfalls, what were the pain points in this model. Okay. And there are some advantages also. Advantages, less skin in the game. So with less capital also, you can start your business.
Right.
Right. But the disadvantage is it takes longer cycles to get to procure lands, and then quite a lot of times landowners also involved in your business, in the product design and all of that things. Luckily we at ASBL, because I set up a new company, I didn't have to probably adhere to that rule. So ASBL, from its origination, our entire business is capex heavy. So we buy land and do, right? Because you buy land, your land acquisition cycle probably, which takes 12-15 months. During my dad's time, though, it used to take 2-3 years. Like literally, you had to become relatives of landowners before you could get the land. Right now, we don't have that much time. Right? So when you buy land off the market, the cycle time comes down to 2 quarters, probably 4 to 6 months.
Okay.
So that way you've gotten the land quicker. Now, naturally, the disadvantage in this is you need a lot of capital to invest in that.
Right.
I'll even probably down the line, I'll tell how we source the capital also.
Okay. Yeah.
A lot of capital you need. So the skin in the game is very high. This is a high risk, high reward game, right? Let's say because naturally we are putting a lot of money upfront.
Yeah.
That put a lot of pressure on us that, okay, boss, get your location right. Location any builder will get right. 90% of the builders, if you can't identify a good location, then it's really tough to be in a builder business. Just like if you're an actor and if you can't identify a good script, it's going to be difficult for you in that career. Right? Same thing for a developer is location. Right. But the more nuanced thing is product market fit. Right? Kis location pe, in this location, what is it that I can, which product can I sell, and who the customer is for that. So this, we had to put a dedicated research team, and we started gaining more expertise around product market fit. And there's continuous learnings. And it looks like most of it we got it right. So I would say we are in a comfortable position.
The most talked about subject is Hyderabad market, right? And I think there is a sentiment where people are very iffy about, should I invest, should I not invest, because the market is down. What are your thoughts?
Okay, let's bust some of the myths in that. Yeah. There is some reality also in that. We'll diagnose each of it. So first, let's look at the market sentiment. Why sentiment is low? So you look at any market, right? Which probably you look at statistically. Hyderabad mein real estate prices have grown anywhere to the tune of 12 to 15%, particularly in housing segment. In plotting, right? It has grown, given much higher alpha from almost 2020 onwards, around pandemic time and all of that, to probably 23-ish and 24 first quarter tak. Right? What happened in this period of time? See, two things which have happened in this period. One, globally, because of the pandemic, credit was available cheaply. Matlab money supply was high. For low interest, banks used to give you loans. Right? Like you look at the home loan interest rate, probably right after the pandemic, to 6.5%. Even West may also, if you look at America, their interest rates were like 1% or something. So when the interest rates are low, it's easy to borrow money, right? When people borrow a lot of money, there's a lot of money on hand, then what do? You go and invest. You couldn't go and consume much. Consumption, okay, I've got a lot of money. Let's say I want to go on a trip, I want to go to a restaurant. You couldn't do this because pandemic had a lockdown and restriction on all of that. So people had a lot of capital on hand, and that led to an asset boom world over. Right? Hyderabad did one of the best in the world. I can definitely, if statistically we did actually. So that actually fueled all of this. Right? Okay. And apart, yes, naturally at that, during pandemic also, I must, under the SRDP program, which, they built a lot of flyovers, infrastructure was being upgraded, like throughout our city, and all of that, got added. Right? Though the sentiment from the commercial sector was down, like a lot of leasing was not happening. But that, that really didn't that was negative sentiment on the commercial side, but highly positive sentiment on residential. So Hyderabad took up this curve couple of years earlier, from 2020 onwards, 2019, 2020, little before the pandemic also, the market started running. Most of other Indian markets like Bangalore, Bombay and all of them started running from 2021 onwards. So first we need to attribute to availability of capital. Capital was available cheaply.
In the race.
Yeah, we started earlier in the race. Yeah. Now people have more money, they started buying assets. Now more people start buying assets. What do you happen? Just like stock markets. More people invest, stock price goes up. More people invest, the property prices started increasing. Now for the last, almost if you see 2020 to 2020, whatever the next 3-4 years, because it grew at 12 to 15%, naturally it will also become unaffordable. Anything which runs the average wages, like salary ka growth rate, in our city is around 8 to 10% average
Right.
at a city
Yeah.
scale you're talking.
Yeah.
And if the property is appreciating at 12 to 15% year on year, what will happen? After some point, it becomes sort of a unaffordable. So any unaffordability, any such cycle, after 3 years, 3.5 years, it becomes unaffordable. Same thing is happening across India now. You look at the 2025 first quarter numbers. I think throughout India, we did sales of some 90,000 units versus 2024, we did 1,20,000 units. Prices have gone up, so unaffordability is kicking in. So that's one point. So unaffordability has begun kicking in. So people are feeling, I don't have the money to buy the house now. It's too unaffordable. So that's actually reducing the demand, right? Point number one. Right. And next thing is, the other point I just remember, the other point is product market fit. I think what maybe, collectively as a market, right? If you look from 2021 onwards, there's a lot of push which came in the luxury housing segment. Luxury, I would say large format apartments.
Especially on the west side.
Especially on the west is where most of the demand for the large format apartment category is. So, the sort of thing. What most people did not realize is back in the day, what was happening is, let's say I own a small company, right? What started happening is because credit was available cheaply, a lot of, Western capital came and bought out the small mid-scale companies in our ecosystem in India. So a lot of companies got exits, right? I sold my company, I'm sitting with 50 crores. Back in the day, there was a rule. When I sell my company like that, I got 50 crores. I need to pay capital gain. It was around 22-23%. Now it's reduced, but back in the day, 23%. If I take that money and buy real estate and hold it for 3 years, that entire capital gain is waived off. This did a very big trick. That's why you see a lot of Gurgaon mein 100 crore ka apartment getting sold. All luxury started picking. Now, in 2023, Government of India realized that this is happening. And what they did is they bought in a restriction that it's not unlimited capital, boss. Only up to 10 crores. Let's say I sold my company, I got 50 crores. I bought maybe 5 houses, each worth 10 crore. Only on the one house, I'll give you the rebate. Rest all, you'll have to pay the tax. This happened in 2023 and now you're seeing the aftermath of it. So the luxury inventory is now facing heat because the capital gain tax advantage what was there, that is now removed or significantly cut to size, not removed, significantly cut to size. So these two twin effects played its part. So 22-23 when the market was very good, 21, 22, 23, a lot in the luxury space, a lot of the developers moved towards, okay, now naturally what happens when something sells fast, it means demand is better. And what do people do? We go and build more of that. So the supply of luxury homes has gone up a lot. More than what the demand is. Now, two things have happened. One, that capital gain tax has been like sort of cut to size. The advantage has been cut to size. And next, after the Russia-Ukraine war, credit started interest rates went up across the world. Now you see inflation went crazy. So all governments started increasing interest rates. What happened when interest rates go up? Your ability to borrow money comes down. Money becomes more costly. When money becomes more costly, people borrow less, people consume less. People go to restaurants less, tours less, buy less properties, all of this. So this twin effect across the world reduce the GDP of all countries and all of that effect is playing. And because market was good, developers in 23, you look at luxury real estate, it's all sold out. So 24 mein what people did, or 22 mein if this happened, 23, 24 mein people built more and more luxury housing. Suddenly the tables have turned because of these two things. Now you're facing a product market fit crisis. That's what it called. Matlab, you are building something which people can't really afford.
Or maybe don't
want. Yeah, can't afford or maybe don't want. Like not everybody would want like a 5,000 square feet space, right? Their need might not be there, right? So because of this, suddenly what happened? The sentiment started falling. Right? This is that's the answer I'll give to this, and this is the legitimate side of the story. Now I'll burst some of the myths. What is going to Hyderabad? Is it going to crash forever, or probably is it going to crash for the next foreseeable future and all of that? Now let me bust some of the myths. Like I'm a big believer of Hyderabad story. One, straightly because I'm heavily invested in it also. Right? My pura business is only out of Hyderabad. I'm not doing any other town, or at least for the next 5 years. Right, so all my eggs,
like so clear.
All my eggs are only in Hyderabad basket. That I'm very, very clear. I'll make it very upfront also. Right, so Let's look at what is working, like on what data am I running my company. See, as an investor, I too am an investor. Investor kya karta hai? Investor will buy 1 flat, 2 flats, 3 flats.
Right.
As a developer, I'm buying land and building 1,000 flats. So even, I also have all those flats, right? So why are we doing that? And we buy the land. So skin in the game is high.
Yeah.
So now let me pitch the Hyderabad story. Right? Still pan-India, we are the India's most affordable place to live. Right? Let's look at statistics.
Okay.
Right? We all know that Hyderabad real estate has grown a lot. Do we really know how much Bangalore prices have gone up? That's where people don't see in relative sense. You have to see in relative sense. Like, let me share one data. In Hyderabad, in core urban center, let's assume for some time Gachibowli is a core urban center.
Yeah.
Right? Most of the Gachibowli, let's say you're buying anything like a decent 2,000 square feet flat, right? It costs you around 10,000 rupees per SFT. So Gachibowli is a prime urban center. Let's look vis-a-vis Bangalore. If you're buying in prime urban center, how much does it cost? Per SFT costs around 18,000 rupees. Right? So we are a lot cheaper. In Gurgaon, it costs you around 22,000 rupees. And all of this is stats. Maybe I'll even publish, you can even publish the links in the comment section. Mumbai, though, okay, there's no need to compare, but Mumbai, it costs around 60,000 rupees.
Yeah, I think, yeah.
Right? Because it's a landlocked city.
Yeah.
But look at our clear competitors, which is Bangalore, which is Gurgaon. Right?
But I think also the income is also very different in the
Not really.
city.
Let's look at income statistics also. That's a good question. So as per the statistic, right, average income level at a city scale, right? Most people in the city are doing decent jobs. At a city scale, average income level in Hyderabad is 95,000 rupees. Okay. Bangalore 1 lakh rupees, Gurgaon 1,10,000 rupees.
That's it.
That's
the difference.
That's the difference. In fact, in some departments, Hyderabad is doing better than Gurgaon, right? Because of the tech jobs which is getting created. I'll even tell the tech side story and what is employment generation happening a little later. But yeah, so income wise, Hyderabad if an average person working in Hyderabad earns 95,000 rupees post income tax. So that is the money you can spend. You've already paid your taxes. So that's a discretionary
net
money after post income averagely. 95,000, Bangalore 1 lakh, Gurgaon 1,10,000. So income wise, you're roughly earning the same.
Yeah.
Now let's say you're living in the city and city life mein kya hota hai? People go to restaurants, they have a social life also, right? Now let's take cost of living from recreation perspective. Let's say a family of 2, right, wife and husband has gone to a restaurant at a city scale, averagely talking again as per the data. It costs you around 1,200 rupees for a meal of 2 in any decent hotel. In Hyderabad. In Hyderabad. In Bangalore, it's 2,000 rupees. In Gurgaon, also same around 2,000 you're earning the same, you're going to save a lot more money in Hyderabad. Next, one more statistic I'll tell you. It's a lot cheaper. The school fees situation is a lot cheaper in Hyderabad compared to Bangalore and Gurgaon again.
Is it? Okay.
Yes, it is. See, again, what has happened is prices have increased over the last 3-4 years.
Right.
No doubt about it. But relatively, it increased at other places also. Na? It's not like only Hyderabad went up and others didn't go. That's not. So when everything has gone up, then you have to see relatively, because ultimately, when somebody is moving, let's say today I'm somebody, I finished my graduation, I'm in Uttar Pradesh, and I want to see where I will get a good job. So more and more people migrate into our city, more will the increase in demand. So when I'm migrating, I'll think all of this. What is my salary like? What is the cost of living? Cost of living, okay, if I'm an unmarried bachelor, working bachelor, then it will be more around recreation and renting and all this sort of things, right? If I'm a married person, then I'll think about, especially kids' school is a big thing.
Yeah. So
let me place, again, I'm talking about a decent range IB school, IB or like CBSE schools.
Right.
Average school fees in Hyderabad is around 2 lakh rupees, right? That's what I think, 1.5 to 2 lakh rupees.
Yeah.
Right? Bangalore is 3 lakh rupees, Gurgaon is also 3 lakh rupees. So you're going to get this better quality of education compared to other cities in this city. Right? Now let me talk rental. Let's say now you're staying in a city, you need to pay rent.
Yeah, I mean, Gurgaon, I don't think I should.
Right?
Yeah.
Again, now rent for a 3 BHK apartment, pretty, I would say, in the city center areas. Right? Maybe 5 kilometers or 3 kilometers from the city center area. In Hyderabad, it's 50,000 rupees. In Bangalore, it's 70. Gurgaon, it's around 70, 75. So your rent is cheaper. Your kids' school fees is cheaper. Your entertainment cost is cheaper. And your real estate cost is also cheaper. That's the Hyderabad story, right? So that moat Hyderabad still has.
Okay.
This has not gone on its own.
I actually have a very, now that I think of it, was it the scene where we were much lower and we grew so fast that we were able to match it.
Yes. Yeah, most people even don't understand the base problem also. See why Hyderabad has grown a lot faster. Like the boom cycle which started in cities like Bangalore or Mumbai or all these places post 21, Hyderabad is 2019 and all of that is because if you look like 5-7 years before 2010 to 2013, all that time, and there was a lot of political agitation was happening, state agitation. So that 3-4 years we hardly grew. Then political stability came, state got divided, 2014 the entire situation got stabilized. That's when the growth started coming in. So because all the growth what we lost there, we sort of caught up to it. That's why prices rose little more than other cities. That's one key thing. But even after prices rising so much, we still have much better statistics. And a couple more data points also I'll mention because of the Hyderabad story. Now, next important thing is when somebody is living in a city, utilities is very important. Utilities matlab electricity, water and this. Now, electricity problem, pretty much most of these big cities have solved it. 5-10% here and there, but
I think water is something.
Water is the next main thing, right? Now, let's share some water statistics. Right, one big part of living in a city, like city life ka ek major thing is piped water. Still, I think most people don't understand the water thing. People think water, matlab I'm going to drill a bore and pull out. Bores can't sustain this sort of, water requirement.
Especially if you're a high rise.
Especially, in fact, after 8 floors, it will never be sufficient. Because the density, right? It will never be sufficient. Any city you go, it won't be sufficient. And there's a lot of recommendation by all the organizations globally that underwater, like water bore wells is not a sustainable water and it depletes the thing. All major cities in the world go for piped water. Just like how you have piped gas connection in gated communities versus standalone buildings, there's the same way, piped water. Now, let me talk about
that Manjeera pipe.
Yeah, like let's say your house, like, now most of the city, the water for all the communities and houses comes through piped water. Government lays a pipe and then you tap onto it. Let me share interesting statistics here. Pura Bangalore. Now, Bangalore, you've seen recently how much bad condition of water it has been. And again, I'm not talking absolutely. I'm not telling we won't have water problem. I'm telling relatively where we are. Right? Now, very interesting data. Bangalore has 13 million citizens. Hyderabad also 13 million, 1.3 crore people. For 13 million civilians, Bangalore water board is pumping 1400 million liters per day. That's the water they're pumping. Hyderabad is 2600, almost double for the same number of people. Right now, the coverage of the water pura pipe will be the water pipe. The coverage of that in Bangalore city, right, is 575 square kilometer. In Hyderabad, it's 1100 square kilometer.
Double again.
Right, double again. So now what's happening? The average per capita water consumption in Hyderabad is better than Bangalore because availability is high. Which is very, very, very important aspect of city life. Again, please mention this. I'll tell the sources of this also. It's all, I pulled out all the sources. So that's the thing. We need to rely a lot on data. That's when we will know we can clearly verify opportunities.
So where does one verify? Like me as a layman, I know you need to look at data, right? As we were talking a little earlier before the podcast started, that we are so relative driven. You're like, say if my friend is buying, we'll all buy the same.
There's a social network driven buying happens in real estate.
Exactly. And how does one actually look at data? Because data can never lie. That's where you get proper stats and you know if it's going to work or not.
Correct.
So how does one look at it and how does one analyze all of that?
Okay, let's now break it down to I'm an investor, right? I either am investing in a house, an apartment, or I'm investing in a land. Land is a little more complicated because the data availability is low, but there also I'll tell out some of the sources. Like, because when we are buying a land, what are we doing? Right? We also have to look in data, and we are probably investing 500 crores to 1000 crores in a year. So we need to get it right. See, one best non-corrupted, like completely clean source of data is RERA website. tfrera.in or .com is there. You simply go and you put a pin code or a micro market. Best is doing pin code level search. That pin code, they'll give you a detailed statistic of what is the project, how many 2 BHKs are there, how many 3 BHKs are there, right? And when this is going to be handed over, all the data will be there. Isse you can develop a supply equation. Okay, in this micro market, how much supply is coming? right? In fact, you can even download the report, just give it to any chat GPT or DeepSeek, it will sort of, summarize and give it to you. So very, very important is understanding the supply. Point number one. Next is upgradation to infrastructure. Like let's say government is making a road like which was, I don't know, like 40 feet road ko 100 feet bana rahe. 100 feet ko they're making it like a much bigger road or building a flyover. All this sort of what I would say, upgradation to infrastructure. This sort of data is not clearly available at one source, but however, there are good amount of YouTube content creators who make these videos and keep posting online. Like one thing which I follow is Travel with Lakshman is one good channel. I follow that to know, okay, which way the flyover is going, what is update work, where the mall is coming, where the school is coming, right? And there are various other, in fact, one as your channel also, you guys also make such content, right? So all you can probably subscribe to this 5 or 6 channels and you are going to get that.
It's like the weatherman, Telangana weatherman.
Exactly. Exactly.
He's pretty accurate though.
Yeah. So you can look at these channels and there'll be good amount of newspaper clippings. Whenever a government is building, let's say a metro or any flyover or anything, they do announcements. So you can read this on the newspaper clippings. So isse kya hoga? Okay, you will realize that, okay, infrastructure, let's say I bought a piece of land, which was, which was around a 40 feet road. Worth of that would be one thing. Now let's say the 40 feet road became a 100 feet road. Naturally the worth will increase. Now, because 100 feet road came in, let's say some school came in, again land price increases. So will be the apartment price also consequently.
So all of this you can see it on.
You can see it. Like how do we, like in fact there are Google Maps ka APS. I think you can put $10 and buy that. Like we use that. Okay, we give a pin code and say how many restaurants are here. Okay, now in one pin code has let's say 50 restaurants, other pin code has 25 restaurants. Which one do you think will have more prices? Naturally, right? We search how many, before though it was important how many ATMs are there. Now it's irrelevant. People use UPI, right? How many petrol bunks are there? What type of car showrooms are there? What type of apparel showrooms are there? Like let's say for example, they're jewelry shops. What type of jewelry shops are there? How many are there? First, forget the type. How many are there? So we attribute a weightage to all of this. Okay, petrol bunk, because see, what does a petrol bunk do? Makes ease of living. What does a school do? Ease of living. Bigger road, ease of living. A mall, like enhance, will make your life much more enhance.
Maybe like the quality of life or
goes up.
lifestyle.
Because people want to go and time, like they have to, entertainment is required, right? So you put all these things and you don't again need to really scratch our head so much. Simply look for at a broad level, look for how many entertainment spaces like, malls or maybe temples, this sort of places of worship are also very important. And things like
you'll look at salons,
utilities.
Okay.
Think about what you will do in your day-to-day life and how many such facilities are there in the neighborhood. That's all it is. And for this, you can simply use Google Maps ka APIs. It will just list all the businesses and give it to you in that pin code. And now the data has gone up online so much that business ka, what is the, let's say some restaurant, even the rating and even the approximate price for 2-3 people also will come there. So see, let's say in one area, let's say the restaurant average, food for 2 people costs 3,000 rupees, other place 1,000 rupees. Now you'll get an idea what sort of that area, what sort of people are living. So all of that thing. So this is all, again, these things, we can do this data. If somebody is spending 10 hours before they are investing, 80% of the times their investment is going to be successful. 20% there will always be risk and reward. There won't be risk-free. Risk-free matlab you should invest in government bonds. Risk-free. You'll get, but what is the return you'll get? 6.5% or something you'll get. So there will be risk, there will be reward, but you can reduce the risk big time by doing these research. Right? So these are some of the places where you can go search also. Of course, now there are a lot of reports also which come from various agencies. Now these reports, 70% the data is accurate, 30% it might not be because different report talks differently.
Right.
But at least PSRA website cannot lie.
Right.
The Google Maps cannot lie.
Right.
These two foundational sources you can take and you can build. And next is you can even go to developers' websites. How we also do it is you go to a developer website, you see all their past completed projects and you see the current project. If the current project is looking too much different from the past project, then attribute more risk. I'm not telling the developer cannot build.
Why would there be a risk?
See, let's say for example, I'll tell you our own example, right? Our first project was something called ASBL Lakeside. Right? The first project was we did like a 9-storied building. The immediate second project was 35-storied. If I was an investor and I had to bet on ASBL that day, naturally my risk would be higher. Now that the second project is delivered, we got OC answer. So
no, but because I feel like if I have to see it, it would be like they've upgraded. That means they're growing as a company.
But think about this way, Megha. Like, for example, now I've built 9-floor buildings, so I'll have one level of expertise. Right now, I'm building a 35-floor building. Like, let's say, for example, so far I used to make a certain grade of car. Now, suddenly I'm making a very higher grade of car. My expertise also is going to be a challenge, right? A 35-floor or a 40-floor building. Most of high rises are now 40 floors. A 10-floor building and a 40-floor building is, from an engineering aspect, is very different. The technicality, the sort of pumps you need to use, the HVAC systems, the electrical system, plumbing system, lift, vertical transport, all of this is different. For most of this, you need consultants, which you don't need in 10-floor building. So when you're doing 40-floor building for the first time, you might not even have those consultants. Because I don't know that I need to have them. So there are these technical challenges. There is that no, it's like this now. Let's say you're like a class first in 5th class. Thodi na ki next time instead of going to 6th class, I put you in 10th class. Will you succeed? No. It's going to be a lot risky. Right. You might be an exception, right? But it's going to be a lot risky. So
and I want so.
Same probably for me. So probably and yeah, when we were building a 10-floor building versus a high-rise building, the knowledge curves are very different. Again, I'm not telling people can't do it. Like we ourselves also, we did it, but it was a lot more risky back in the day for people to invest in us. Same logic applies to it. And next, another very important.
But as a builder, was it more difficult also?
Building a high-rise building?
Yes.
It is, definitely.
For, when you transition.
Yeah. See, one, you need to identify more subject matter expert consultants and subject matter expert vendors. Both are important. Right? Which in 10-floor building, let's say in a high-rise building, I might have 10 consultants. In a low-rise building like 10 floors, I need maximum 3 or 4. That's it. Because vertical transport is, matlab lift ka. Lift mein I don't need a consultant for a 10-floor building, but for a 40-floor I need a consultant, because not just talking on the speed of the lift, the number of lifts, speed of lift, and niche pit ka depth. Very, very important. All these technicalities are there.
So as a buyer, what I would think is maybe when you transition, maybe you didn't even get the right expertise, and I don't know how the quality of the building would be, right?
Yes, you need to put an expertise metric around a developer. Right? Very, very. And next big understanding, where if you ask me, 80% of developers struggle, is the cash flow life cycle. Okay. Right? In a 10-floor building, when you sell, the way you receive money and the expenditure pattern is very different compared to a high-rise building. Many people misconstrue this cash flow pattern. I've seen this a lot happening. In fact, in our own selves, when we were building a 10-floor building to when we were building a 40-floor building, the cash flow cycle was very different. Which we had to also add a lot of learning curves. So this cash flow pattern is misunderstood, and you get money early, and then you might probably think that that's profit, and you might invest elsewhere. Money behaves differently in different asset classes.
But with RERA, can you still do that?
I mean, see, with RERA also, right? Again, back in the day, RERA, I don't know, I think it was notified much later. And even micromanagement, RERA can't do. When people also has to understand, nobody can do micromanagement. How can some agency, some customer, or anybody, can I go and run somebody else's business? I can't. No. So there are also at a quarterly level, maybe they can do at a 6 months or something, but they can't get into detailed part of it. Now, every transaction, which let's say every month I'm paying my bills, which bill I should pay, I'm sort of outflow of money is there. Like let's say I'm buying a land and I'm buying steel, cement and all for existing projects. When I can buy the land, when I should not buy the land and pay for this. All of this is a very complex math. This life cycle also, people typically when they're doing the transition, it might be lacking. In fact, I've realized that when we were doing it, we used to do more bank tie-ups so that our dependence on sales had to come down. So in 5 floors, what happens is, Megha, even the handover life cycle is 1.5 years. So people, you pay money, you're going to get in 1 year. High rise, you'll get in 4 years. The amount of money which builders can expect from sales in a 5-floor building versus high rise building is different. So if you're depending so much on sales, then naturally you'll have less cash flow. If you have less cash flow, what's going to happen? You're going to build slower. If you're going to build slower, then you're going to miss your deadlines, and it's going to add to risk. So buyers have to remember there's something called transition risk. When a developer is moving from one asset category to another asset category, there is going to be a huge transition risk. In fact, if you look at a lot of developers who transition not from let's say 5-floor or a 10-floor building to a 40-floor building, but who transitioned from a plotting development to a high-rise building, there the risk is much higher.
Yeah, because
you get money much the life
you're
cycle
not
is.
constructing anything.
Yes,
on
there
the project.
you don't have you do not need any engineering expertise, zero. You don't need it. I mean, if I don't need it, why will I have it, boss? I won't have it, right?
Yeah.
You don't need it. And the cash flow cycle in plotting is totally different, right? You get a lot more money upfront, like because let's say in something like let me put it this, in something like a plotting venture, na, the amount of, let's say I'm getting 10,000 rupees per yard, I'm just throwing in, right? Your profit is somewhere around that, 3 to 4,000 rupees. In the rest 6,000, land acquisition, land cost itself is 5,000 rupees. 1,000 is only OPEX, matlab engineering expenditure. In something like high-rise buildings, let's say I'm telling Gachibowli area where you get 10,000 rupees per SFT. Land per SFT costs us around 1,800 to 2,000 rupees currently. Building costs us close to 4,500 rupees and another 1,000 rupees extras cost us. Matlab marketing, HR and payroll and finance is a huge cost. So what are you looking at? 2,000 land cost, 4,500 is your building cost, another 1,000, 1,500 of your indirect cost is what we cost. Resource mobilization cost. You add all of this, you're landing at what? 7,000 to 7,500. You make that 2,000 to 2,500. On top of this, there's land debt. I'm only talking construction finance debt. That is the debt you take to finance the building. But let's say you're buying land, then you'll have a land debt also. So you build fast, sell fast, you will make more money. You build slow, sell slow, banker will make more money. So that's where now the margin fight is only, margins are pretty much flat. It's only difference is if you operate better, you make. If not, your banker makes. That's all. So there is this much amount of detailing which lies, and naturally this information is also not there out there. Like, and this is where I am, channels like this can really empower buyers, so they're aware of something even called transition risk. So plotting makes totally different. Now you have seen a lot of developers who have moved from plotting to high-rise really struggle. Not all, but good number of them. Or people moving from standalone buildings to high-rise also struggle. So there is all this pattern, and even there's another problem of black money also in real estate. In plotting, you have way more black money. In housing, good thing it's been falling down, and it's in certain product segment it's almost negligible. So again, handling, and I'll share one interesting statistic also, right? So when I do a lot of road shows, I meet I meet people a lot, especially when I'm meeting people in the US or some across my various travel stories. I could realize that many people say, I invested in this project, I lost money, right? And all of that. Then I kept whenever they say, okay, what did you invest? How much you invested? And I kept asking, okay, how much cash you give? Especially this was morely pertaining to plotting, right? After talking to a lot of people around this over span of 2-3 years, I realized that whenever people said investing in cash more than 30%, the risk has shot up crazily. Now, why is it so? Why is it that somebody gives cash, the risk of a project is really, and housing, that number should be less than 10. I'll tell you what happens, right? Is that, see, when somebody gives a developer cash, what happens to that cash? Either the developer can take that cash and invest back in the project, that is pays vendors or contractors and all of that.
Or invest it somewhere else.
Or go take it out and invest in some other land.
Yeah.
In the first plan, whereas I take the money cash from buyers and sending it back to my operations, is difficult because if I have to give my contractor cash, I have to, my contracting team is going to know, my finance team is, there are 5-6 people who will know, confidentiality issues happen, income tax, any raid happens, data is out there, right? So because of this confidentiality issues, we can't keep it exposed, right? So the money typically goes out. Now imagine 30-40% of the money going out. Where will the money be there for finishing the project?
Okay.
So these are all. So as for buyers also, whenever the cash investment goes up, the risk also goes up. Again, I'm not telling that you won't make return. You will make great returns also, but risk goes up. It's all relative. It's never absolute. It's never 0 and 1. It's always in between. So
it's
these
like
are all
the stock market.
Exactly. See, that's also one thing which I feel like jitna content and jitna awareness is being built on equities investment, real estate is also, it's a very good investment. Like for example, statistically, more than 70% of entire Indian household wealth lies in real estate.
Yeah,
we are the big daddy.
And buy property, buy land is part of our childhood. Like, it's injected in us.
Yeah. And why even take a look globally, right? America's biggest landowner is who? Bill Gates. Second or third biggest is Jeff Bezos. Like, in fact, I was speaking with somebody now in AI day and age, anything can be created except land. But again, I do not want to generalize and say that land is always going to appreciate. That is also not true. You have to.
Really, it's not true?
It's not. You'll have to time it well. You'll have to get your data stats well. Like for example, let me share some of the things, right? Now the problem with plotting investment, particularly, right? Now you look at the plotting market, it's like a sitting duck. Nothing is moving. I've met a lot of people, friends and peers who are into that asset category.
But isn't plots easier and cheaper to buy?
Yes, it is.
Than a flat.
It
so
is.
Why is that plotting projects are not doing well?
So housing mein because of RERA and because there's a lot more data available, you can anticipate a supply. Kitna supply aane wala idhar. Plotting, most of the projects are unorganized. Developers there also are unorganized. There is no concept of supply. Somebody does a good layout, there's good demand. The entire village is now doing plotting. So supply is what has killed the market. Plotting has gone through crazy amount of supply. That's the problem. There's excess supply of plots.
Okay.
Right? And next, the infrastructure. Let's say now plots are purely sold on. See, one advantage with housing as which plotting doesn't have as much. Again, I won't say it doesn't have at all. Doesn't have as much as housing. The advantage is there is an end user who's going to live there. That has some value. Most of the plotting is just investment, right?
Yeah.
It's just investors buying. What is its end use? End use is not there. So when people are investing, what are they investing? Why are they investing? They are investing, anticipating that some infrastructure is going to come there. It could be an office building, it could be a factory, it could be a road, or it could be anything like that, right? So you're buying on the anticipation of somebody else doing something.
Now, anticipation of selling it later.
Selling it later. Let's say because most plots around what happens, industrial plants come, right? Let's say now you're anticipating the factory comes and you're going in buying there. If the factory takes longer time to come, then your investment is going to, get holded for longer time. Like let's take for example.
Like the RRR, I think there's a lot of anticipation around the RRR.
Triple R region, right? Those are now, the entire thing comes, then it's naturally justified. But what if, now the question is by when will it come? Because somebody as an investor, I'm going to buy land today. Let's say, I don't know how much it costs, but let's say 10,000 per yard a plot is costing.
But you bought it in anticipation of it coming up and then price going up and then
it came, but it came later. Let's assume I thought it'll come in 3 years, but it came in 7 years. Then my money is going to stuck. All this I got to learn from my dad. So I have some advantages. And though I also did a couple of mistakes like that, but relatively they were small, so I'm relatively safe. But with the best of us, it happens. Right? So what I'm realizing is more and more it's difficult to anticipate, infrastructure, because rather it's more safer. At least we as a company has moved towards, I don't want to, and again, I'm not saying this as a mantra and all, but this has worked for us. Something else worked for somebody else. But for us, what has worked is now we have totally moved away from the anticipation game. We don't want to think, okay, a flyover is going to come, then I will go. That is why I'll go and buy. And those sort of things.
So you only buy after the flyovers?
We only buy after we have a good amount of visibility on the infrastructure and pura social, both civic infrastructure and social infrastructure. That is when we buy, so that the margin of error comes down. What if that thing doesn't come? So we have also done our mistakes and learned through that. So that's the learning.
Okay. You've been so big on the IT sector side of things, and I want to know if there's other industries that are contributing towards the growth or towards real estate.
So Megha, so Hyderabad's biggest moat is the fact that we are usually attracting tech talent. And I would say we should invest more on that, get more of them, right? Because what happens now, when one type of industry booms, right, more and more people migrate, whoever are working in that sector, more and more they migrate into the city. Right? Like for example, now we are seeing a big boom of global capability centers, which are opening up shops. So what is a global capability center? Essentially, all these big MNC companies, their pura tech development is what they're shifting here. Like recently, I've seen in the newspaper, Vanguard, which is one of the biggest US financial investing company, has set up office here. McDonald's has all of this. So because of this, now what happened, more and more, once they open office, what's going to happen? More tech people are needed. Now when they need more tech people, now tech job, we need to understand, is the highest paying job in your job ka hierarchy. Right? Now you're attracting talent which gets paid high. What happens now? Somebody who gets paid high consume more. which will have more and more spillover of jobs. Matlab, people who are earning more tend to consume more entertainment or go out to restaurants or anything. They're going to buy a bigger car and all of that. All this consumption requires more and more jobs locally, so the economy will boom. So that's one very, very clear thing. And to put it in statistics also, like last year, we did the highest leasing ever in the history of Hyderabad. The previous best year was 2019. We did around 10-11 million square feet. Then came the slump of because of the induced by pandemic. Last year we did around 12.6 million square feet. Now what does this 12.6 million even mean? Like we speak as developers million or square. Kya hota hai wo? Right. So to put in perspective, per capita consumption, for every 100 square feet, you need one employee. That's the average requirement of space. If companies have taken in 12.6 million square feet, divide that by 100, matlab every million square feet, 10,000 jobs. 12.6 matlab 1,25,000 jobs are going to come. Now it's not like company leased the space and I'll just keep it vacant for 5 years. That doesn't happen. Na? I've leased the space, I'm paying the rent, so I better recruit people and start making utility. So and this year also there are projections that we'll be doing around that 13-14 million, slightly better than last year. Matlab what's happening, every year on year we are generating like net 1,25,000 to 1,30,000 IT jobs per year. That's a huge value add for us, right? Now, nevertheless, we are doing exceptionally well in other fields also. So let's assume from an income hierarchy, right? So IT job is the topmost, like maybe people working their average earn.
Like your salaried class.
Yeah, this is like your working professionals, right? And an average of IT employee, let's say from vice president to probably somebody who got recruited, average, let's assume people are earning around 1.5 lakh, like a mean I'm telling, right? Next, you have the pharma sector. If you actually look at it, Hyderabad is called the pharma capital of India, not just the state, right? We have the Genome Valley, and now government is even coming up with various pharma clusters, right? So all of this is further going to boom there. So what happens in pharmaceuticals is more manufacturing centric, like I would say high skilled manufacturing centric. So good amount of jobs get created in that 60,000 to 80,000 range. Right. Then if you look south of Hyderabad, near Adibatla, that area, a lot of industries are coming. Right. So we are doing exceptionally well when it comes to generating jobs at 1.5 lakh a month. We're doing very good when it comes to generating jobs at the mid tier, that is around 75,000. Now at industrial scale, now if you look all the iPhone AirPods, most of them are now manufacturing has begun from Hyderabad. Right. If you look at the Foxconn facility, I think phase 1 is sort of production has started. They're hiring, they're working with close to 20,000 employees. If you look at the Pura plan, which they want to complete by 28 or something, they would want, when it's completely finished, they will be employing 1 lakh people. 1 lakh people in single compound, out of which 20,000 are already working. Right now, over and above that, if you look around that Pura Kongarkalan area, a lot of other industries are setting up. Pragati Printers is one of the biggest manufacturing and one of the biggest paper and print related guys. So a lot of such facilities coming up, which is generating jobs at your 20,000 to probably 30,000 range. So you have enormous job generation, which is I would say industrial jobs. So you have industrial jobs in the city doing exceptionally well. Right. Then you have pharma, high-tech manufacturing. You're doing high-tech to mid-tech manufacturing like pharmaceuticals. You're doing very well, and you're doing tech jobs very well. So we are actually very well covered. But generally, what happens in the public space is more IT jobs ka discussion happens because they're high-paying jobs. But high, mid, and industrial jobs, everything we are doing very, very good. So this is going to this is a long-term story of Hyderabad. Iske upar one has to base their investment strategies.
You mentioned IT is the highest paying job, and a lot of them being in the West, right? And hence a lot of density towards that side and maybe requirement that side. Do you feel there's an imbalance of, development?
Development, by that you mean like
real estate.
A lot of real estate catering to IT folks. Is that what's the threat? If any,
in general, if you have to look overall, say residential. It's very expensive.
Yes. But 90% of the consumers are IT people only.
Yeah, right? and there's a lot of development happening. And if you have to look at other zones as well, do you feel there's an imbalance? Should it be more spread out?
See, I think these sort of things are basically market-led, Megha. Because we can't really force a market to go in all directions. Many times, many people policies try to do it, but it doesn't happen. See, because as a enterprise, wherever my customers are, I need to go there. right? So most of the IT jobs are coming up in the west of Hyderabad, particularly two neighborhoods, which is HKC, the Hyderabad Knowledge Center, that is the Raidurg area, and next your financial district. These two areas is where 95% of your leasing is happening. So that is where our customers are, we go there, right? However, now with the pickup of pharma and other banking services jobs coming up, we are seeing growth in other sides of the city as well. Right? If you look at Hyderabad broadly, when we map it, right, west of the Hyderabad, talking from an apartment, residential real estate perspective, right? West, your average ticket price is around 2 crores. Right? So north is Kompally and that stretch. Also with the, I think 2024 when they came up, they're building a flyover. I think that's what they announced. A big flyover which is connecting Suchitra and all of that. So that's greatly going to decongest the area. Right, so that area is roughly around 1 crore, 1.2 crore range. Then east of Hyderabad, right, that's currently the most affordable. That's currently around 60 to 75 lakhs range. Then south of Hyderabad, housing has yet to move. Right, some projects are launched. They are also around that 1 crore ticket size. So you can see a spread of how things are happening and things are moving. But yeah, we are reasonably well because the IT we have been growing exceptionally. That's why it's more catered there. In fact, a lot of people working in the IT industry also live in north and particularly north areas, right? Because affordability and cost of living bhi hota hai na? Like financial district mein the cost of living is higher, right? Probably city center is slightly lower, and probably again north you go much lower, east you go much lower. So people have various choices, and with metro coming in and all of that, they're easily able to commute. And depending on their income patterns, people stay.
And there's also a lot of discussion around where there's not been a lot of sale happening for those units that are priced around that much. What is your take on that?
See, then if it could be it's in my opinion, it's probably a product market fit. West mein kya ho raha hai na? One, you've got average selling price of 10 to 12,000 square feet. Majority, I would say, is 10 only, plus minus, right? Now, 10,000 square feet at a 2,000 square feet apartment costs 2 crores. And a lot of job generation is happening there. 10,000 square feet at a 10,000 rupees per SFT price at a 5,000 apartment is 5 crores. Now, you see how much how much growth of employment is happening at somebody who can buy a 5 crore home. See, think about this. Somebody who's buying a 5 crore home essentially has to be a self-employed person. Matlab a doctor, CA or a business owner. And on top of this, maybe a senior tier working professional. Very senior.
Like a C level.
Like a C level or just VP level. Or it should be a 10-year, 15-year plus NRI. Because dollar rupee arbitrage say they can buy. These are the only categories. Right now, one has to study the growth of jobs in these sections. Naturally, the supply is much higher than the growth of what jobs or growth of work which is happening, the growth of employment which is happening there.
Okay.
So whenever
supply versus
it's a product market fit. It's a purely then whenever market does bad, people think people are not making return. It's not the return wala problem. It's a product market fit problem. So if I'm building something which has less buyers, naturally it's going to struggle. And why this happened? The change of that capital gain wala thing. Most people are not aware of this, but that really hit it hard. And second, capital is much tighter today. People are, businesses, the business cycles have changed and all of that. So naturally, the consumption appetite also comes down and supply is high. So that's what is really, pinching the market. But if you look at, projects which are catering to domains or industries where there's good job growth, those are moving. And second thing also, see, the market was running at 12 to 15% growth rate year on year. Affordability also will be a challenge. See, I think in the current cycle, probably by the end of the cycle, maybe up to 3 years, will become more affordable. So market will run like a wave. Market is never going to be always up or always down. Market will run like a wave because it ran faster. A lot of people made money. At the same time, it became unaffordable also. Now it's going through a curve where it's going to become affordable. Right? So it's cyclicality. So an entrepreneur and an investor has to be smart to understand the cycles and then invest.
Okay.
So because see, as an entrepreneur, what am I? I'm continuously investing in the market, right? So I need to study these patterns and invest. Same for an investor. And I've mentioned the data sources also where they can go and get. And what are some of the practices we do? So people can use that.
Got it.
And the various other things also. This is just our understanding.
Speaking of IT sector and the latest news, Trump announced his new tariff. What is your view on it? What do you think is going to happen?
See, again, I'm not a real expert at the subject, but from what I know, what I think is going to happen. See, one, I think, yes, it is going to have decent amount of impact on the IT services, right? Where companies like Infosys, TCS, Wipro, Cognizant, they are taking in work from MNCs and probably doing the tech work or whatever. If you actually look, a lot of these companies are more now moving towards Pune and other cities. Like if you look at Hyderabad and Bangalore, what I keep calling the twin engines of Indian GDP, right? We usually contribute to the Indian GDP. These two cities, a lot of product related companies have moved here. So core tech development. So not too many services jobs, but direct tech jobs are moving. So I don't know how much of that impact is going to be. Like for example, Google is there. Google has close to 35,000 employees in Hyderabad, second highest after their US office, right? So they are not outsourcing their work, right? They are doing their tech jobs are moving here. So I don't know how much of an impact, how that's going to play out, to be very, very frank. But yeah, I think good, given that there's a great amount of core tech companies which are building their tech here rather than outsourcing, I think it might be slightly less. Another point I want to note also, say also, Megha, is that now with wave of AI and all these things happening, US made tech jobs are getting cut down, but a lot of them are moving to India. Let me share one statistic also. 2024, at a pan-India level, we have done the highest leasing in the history of our country. If I'm not wrong, 75 million square feet of commercial
in
space.
2024.
2024, last year. This year also we are projected to slightly beat it. So I think a lot of tech development is moving to India because now I think the job market and the availability of talent is very mature now. So if you look at something like Apple, their pura Apple Maps ka R&D unit runs out of Hyderabad.
That's right. Yeah.
Right?
Yeah.
Microsoft ka major R&D runs out of Hyderabad. I think recently they opened 1 million square feet where they are telling close to again 5,000-6,000 more people they'll be hiring, which will be working on their AI related, Copilot related products. So a lot of these Western companies have realized that now it's a lot, you can develop great software and high quality tech from India at fractional cost. So all of that is moving, and US it's becoming more like a sales center. Like you're selling to people there, but a majority of development is happening. A lot of R&D centers are moving. So I think that impact might be slightly less, given that this is not an direct outsourcing sort of a thing. But again, my understanding is not totally full there, I must say that.
So we don't know if it might.
What sort of impact it is going to have. See, again, the world will have its own way. The markets will have its own way to adapt to it.
Do you see it affecting real estate?
It will to some extent. It should. To see, naturally, if the employment is going down. See, think about it this way. What's going to happen? Now with tariffs, let's say as a bank, let's say I'm an American bank and I outsource some work to TCS. Boss, develop me a software. Here is $100 million. Now the $100 million, instead of paying $100 million, I need to pay 26%. Na? Maybe there might be some existing tariff also. Let's say 20% ka tariff bad gaya. Instead of 100 million, I might be paying 120 million. So as TCS, if my cost has gone up, now is the client going to take that money? See, ultimately, when you're paying tariff, who is paying this extra tariff? It's the American companies. You're taxing them, right? Like the American citizens, they'll be paying this tariff. Right now, that cost increase, how will where it will lead to? Like, will it go? Definitely, what I think is it will lead to probably recruiting people who have more AI skills and this sort of thing, so that you can do more productive work. So skills requirement for such jobs is going to go up. And now naturally, compared to a regular tech engineer, an AI skilled engineer, demand will go up suddenly, so it will cost more. He's going to earn more, so naturally then he's a new buyer. In fact, whenever people earn more,
you're saying the profiling might change.
The profiling might, our buyer might change from A to B, but there's always a buyer. It will never be a zero buyer. But again, there are transition risks. Very, very important. There are transition risks. When this transition happens, how long will it take? Did the company, did the developer identify who the new
or will the
buying pattern
demand change? The type of
buyer. The buyer changes essentially. See, I'll tell you one thing. Whenever productivity goes up, right? So why is it that a tech worker gets more money than somebody working in a factory? Because he or she is more productive, right? Whenever productivity goes up, wages go up. This is foundation of labor economics.
But also the requirement. I think there was a time where people did buy 1400 SFT and were happy with it, right?
Correct.
But I think now they want bigger.
Yeah, because the earnings have also gone.
Yeah.
So with this AI and these sort of tools coming in, what's going to happen is productivity is going. Let's say initially I might need like I don't know, 5 engineers to code something. Now as a company, I'm doing it with 2 engineers. Naturally, these 2 are going to cost more. So whenever productivity goes up, wages go up. Whenever wages go up, people buy costlier stuff.
Because there's only skill change, there isn't.
Yeah, it's not like the people have. Of course, number of people will change, but the number which is changing is also huge. You look at the projections for requirement for people with AI backgrounds. It's running into 3-4 million ka shortage is there.
Yeah.
Like, so there's huge shortage. Not like suddenly less people are, suddenly people are going to go away. People are going to migrate from this skills to that skills. Right? So whenever wages go up, propensity to consume real estate goes up. So it's good for us.
Oh, okay.
It's good for us. It's simple. If you look at, I'll tell you, previously, if you get a little bit delve into tech development, we used to have previously back-end engineer and front-end engineer. Like back-end engineer is somebody who builds your structure, framework and your database. Front-end is more like the UI UX guy. Now, compared to the back-end, front-end engineers, a full-stack engineer, somebody who knows the back-end and the front-end. You're merging these 2 jobs into one. This guy earns almost 3x more. Right? So, this people, let's say this guy used to earn 1 lakh, the back-end engineer. Now, the full-stack engineer earns 2 lakhs. Is he going to buy a bigger house or no?
Yeah.
Right? Fundamentally, is he more likely to buy a house than the person earning 1 lakh? Yes. Yeah. So higher wages means more consumption of.
Buy sooner, maybe.
Buy sooner, or even buy a bigger house, more chances of buying that house. So all of that. In fact, that is one of the reason also, not the only reason, why 2 BHKs are getting killed. If you see, are any developers launching 2 BHKs these days? No. But in fact, in some of our projects where we launched 2 BHKs also, I've seen the 3 BHKs getting sold out much faster than 2 BHKs. It's very surprising. Generally, we'll think like bottom of the pyramid. Now, the market is bigger as you go down. But you see, 2 BHKs not getting. Then we did a lot of research. We found out that 2 BHK ke phase mein, the lifespan is very less. Like, see, when is it if somebody will buy a 2 BHK?
If you're a couple, just a couple and
just married and don't have kids.
Yeah.
Right, before
or you're a bachelor, one of them.
Before marriage, people don't typically buy real estate. Less chances. Right? Less chances. So, now that phase of life, when you're married and don't have kids, is how long? Maximum 3-4 years. Or 5
and then
years.
I think then it goes on to a senior citizen category, maybe.
Maybe a senior citizen category, right? Which is again also in a country like India, it's a small population base. Yeah. So what we have seen, so initially why 2 BHKs used to get sold, then probably 2015, 16 or maybe 2008 to 2015, we saw a lot of 2 BHKs getting observed. Yeah. Why did that happen? Because back in the day, a lot of 2 BHKs were actually not purchased by first time buyers, they were purchased by second time, third time buyers for rental investments. Now with property prices going up, rental yield of housing is not great. That's why I tell people, like if you want to make a rental yield, never, but people, if you look at a lot of content also around, housing gives you 3% return. Why do you want to buy housing? That is a rental yield, boss. That is a rental yield, right? And if you want to earn rental yield, don't invest in housing. Invest in, commercial assets.
And was it better at that time when people
slightly could have been, yeah. Back in the day also it was around 3%. But alternates also were not there. Now alternates are also available. Like, back in the day, if you look at our parents' generation and them, when they were in their prime, that 40s, most of their investment was only real estate because that's all they knew.
I think that was a traditional approach.
And back in the day, equity markets were also not as mature.
Yeah.
Like now it's, with an app, you can just enter into it. Now, back in the day, that was not the case. Yeah. So because of that also. But yeah, coming back to the 2 BHKs, what's happening is with increase in property prices, 2 BHK ka rental yield is, let's say 3 BHK is earning 3.5%, 2 BHK is earning 2.5% only rental yield. Why it's earning less? Because I see one interesting thing which is developing. 2 BHK matlab you have to lease it mostly to a family. 3 BHK mein what people are doing is they're like leasing out room by room to three working professionals. Hence the rent is being increased. In such cases, rental yields are going up to 5%. Most of the projects, at least on the west, that's happening. That's bigger. So in 2 BHK, you're only 2 bedroom. With the extra, let's say 2 BHK is what, like 1350 square feet. A 3 BHK, you'll get in like 1700 square. For the extra 300, you'll get an extra room current. So that's why the rental yield of 2 BHK has fallen down. Hence, majority of the buyers of 2 BHKs were second investor, not the primary consumers. That sector has moved away to 3 BHK. So that is also happening. And for an end use, 2 BHK will never make sense because by the time you buy the product and get the handover, you buy the product when you're just married, most likely. By the time you get the handover, you're having a child, and the house will look small. So this is the pattern. So every time and age, there is this pattern changes. And now we are seeing every 10 years. In fact, and increasingly I'm seeing that more and more, is that the patterns of buying are changing continuously, right? Like for example, initially we used to say house is a lifetime dream. I'm talking now for housing buyers. Housing buyers matlab 2 percentile of the economy. I'm not generalizing at an economy scale.
Yeah.
For the top 2 percentile, 1.5 to 2 percentile of the economy, house is a 10-year buy. No longer a lifetime buy. Because what's happening, the first purchase is coming around mid 30s, 33ish, 32, 33. Because if you look family back, because this is what we do on product market fit. Like what is the average, for us very important is what is the average age of when people are marrying. And what is the average age of when people are having their first child? Very, very important metrics for us.
Yeah.
So if you look at that, over the last 10 years, that has also progressively increased.
Right.
Right? So now the pattern is 33ish, 34 is when you're buying your first house. 45, 47 is when you're upgrading your house, because what's happening is by the time a family of 4, 2 things are happening. One, your children are coming to preteens, the demand for space goes up. Parallelly, your parents, they're getting into the 75s.
And then
they are going to shift with you. So hence, then we are seeing people move more to a 3.5, 4 bedroom house, depending on affordability. Then after that, kids go out. Then they want, what's happening is smaller size, same size, because by that time you become richer also, right? As your career progresses. But lesser bedrooms. Instead of, let's say, 3,000 square feet and 4 bedrooms, 3,000 square feet and 3 bedrooms. Then your maid room, all these are, because as you tend to become older, you want more support. Maid rooms and these are. So there's a whole lot of pattern around product market fit, which is very, very important.
Very, very interesting stats. And you spoke about back-end, front-end developer, and how do you know this? How do you understand all of this? Because it's different.
Yeah. I see, ASBL is not a builder, right? We are a tech company operating in real estate space. We have 150 people tech team, purely coders, right?
As in how does that work? I mean, I'm not able to correlate real estate to tech.
Yeah, see, if you actually look, making real estate tech is very complicated, right? If I might delve a little bit into it, a lot of the tech in real estate the idea is, okay, ERP. First though, tech matlab people will think, at least in real estate field, they should think Excel, but now it's moved to ERPs. I use an SAP or maybe other local tools or Quadra, there's so many other tools are there. ERP, these are all, I would say, is early stage technology. Now we're moving towards digital twin, where all the operations you're doing, you can build a virtual model. Built by virtual model, it adds more context to your AI model, like the entire digital model. And every transaction you do, by transaction, let's say I called a customer and I had to share some document. This is a transaction, right? This transaction, if my machine knows, if my algo knows this, if my virtual model knows this, I can now start doing a host of things around it. I can make it more consistent. Next, I can start deploying AI agents around it. So this is how we work. So that you build in more consistency in your service line. Because when I see particularly around CRM and such things, many people have seen the there's a huge dip of experience. Home buying experience comes down once it moves towards CRM and handover and these processes. So I was seeing that there's a lot of human involvement. So now we're seeing how to standardize it and how to agentify it. Let's say I've seen customers asking queries to our CRM team, and naturally, even if I am a CRM executive, I will not know all the information, right? How is it possible? I have to ask 2-3 people and get that information. Now, this is a lot of supply chain. I might take 7 days to get back because I'll have hundreds of questions. But imagine I build in all the context and I deploy ChatGPT, it will give an answer in a second. So this is all what we are building and what we continuously build to make ourselves more, I would say, competent. Because see, again, at the same time, what's happening, market is becoming more and more competitive. So unless you harness technology and you be at the forefront of tech and our field, real estate, we can't have a moat, right? So we need to have a key USP, like how ASBL is going to do better than our competitors. So we rely usually on tech. So that's why I know a lot of tech. So I would say I would reasonably experienced in the product life cycle and all of those things.
I think you beautifully combined real estate and tech and put like a corporate essence to it as well.
Well, it costs us a lot. Unlike what people think, tech is going to reduce the cost. No, it doesn't. It increases the cost actually.
But it makes everybody's lives easier.
Everybody's life is it improves. It makes you scale better, right? So yeah, I mean.
In fact, my next question was going to be that, we've seen you grow very rapidly. And I was going to ask you what was the secret behind it, but I think.
Yeah.
Just,
I think, frankly, 50% has been luck, right? Me particularly and our company, we were born on the right cycle of the market, right? When the market started. See, ASBL was born in 2017. So we are just 8-year-old company. The market just started picking up. See, in the first couple of sites when we didn't have capital to do. I mean, relatively, We had so what we had to do, market was so hot, so there were a lot of investors who could pump in money, and then we started doing sets. Now our balance sheets became bigger, so financial institutions give us money. So we were born on the right side, right cycle of the market. That's our biggest advantage. Like I would always attribute 50 to 60% luck, but the rest 40% we took right strategies. Okay, that don't do land banking. It doesn't work for a developer. Stick to your focus. Like instead of we deployed something like very commonly known Arjuna strategy. If you look at Arjuna and Mahabharata, he was the only guy who saw the fish's eye. Everybody else saw the fish. Somebody saw the thread. Somebody saw something else. So we are very asset focused company. We only build houses. There was a lot of temptation, like at early 2020s or late 2010s, like 2018, 19, when the plotting market was doing exceptionally well.
Yeah.
There's a lot of temptation that everybody were doing. Why don't we go and do it? And in fact, they all got great returns, but we didn't do it because it was not our domain area. Right now, if you look from 2021 onwards, the luxury segment did exceptionally well. It looks stupid if you are not in luxury segment, but we still didn't do it. We were stupid. We still didn't do it. But today it's helping us. So I think the focus, you need to read your data and you need to know where you're going to shoot. I think the spray and pray wala strategy doesn't work. So that way we were lucky until now. But tomorrow I don't know. See, again, we need to again have a huge degree of flexibility. Tomorrow market might suddenly change. We have to adapt. But I think broadly the focus helped us. But 60% are attribute to luck.
So tell me, did the market go down or do you feel it's stagnant?
98% of information is more noise, right? Like when people are making money, they'll put their collars up, and rightfully so. I mean, when I did good, I would want to talk out, right? Actually, when I struggle, I will even talk about the pain, right? Those things are there. See, for prices to come down, somebody has to understand the math behind it. Right now, let's start with one principle. Will a business ever work by selling at loss? It won't. At least a builder business. These days, internet startups can do it because they've got VC funds. You're going to burn, and then after 10 years, you're going to make that money. That's fine. That's not the builder business model, at least, right? I need to make money. Right now, if I'm selling at a price much less than what I'm making money, naturally I cannot do that. As a company, I'll cease to exist, hence I won't do that. Like for example, if you think financial district, the landing cost matlab cost of your land and cost of the product, like building the apartment, and cost of your all overheads and all, that itself is coming to 7,500 rupees per SFT. Now, how can anybody sell?
That's the builder cost.
That's the builder cost. That's what it is, a landing cost of a developer. I'm spending 7,500 rupees per SFT, in which close to 2,000 rupees goes to the land, right? And close to 4,500 to 5,000 rupees goes towards building the product. Another 1,000 rupees is my salaries, marketing expense, construction finance. So all of this milake 2,000, 5,000, 1,000, 8,000. Then maybe 500. You just think 4,500. So 7,500 to वैसे भी cost हो रहा है आपका. Now somebody has to make at least 20% margin, or if not 15% margin. So below that, why will anybody do it? Right? There is this pressure. Let's say now somebody land cost has been low or your building cost is very low, then they can give discounts. And in fact, you look at a very interesting thing also, where deep discounts are given, right? There more stress is obviously a lot of information around the market in that line, especially around one-time payments, right? So I'm somebody who did one-time payments and then we stopped. So I have the life cycle understanding of one-time payments, kaisa karta hai, advantages, disadvantages, everything, right? So what happens in one-time payment is essentially you're a landowner, right? You're sitting on 10 acres of land, and let's say each acre is costing some 50 crore in a good area, and 500 crores is the cost of land. Let's say, 500 crores is the cost of land, and I'm coming and buying that land. Now as a developer, I don't have that 500 crores of land money, right? So in a typical transaction, let's say you're not selling your land, I'm coming and doing a joint development agreement, right? You as a landowner will get 32%, me as a developer, let's say I'm getting 68%. Now in the pursuit of getting land, what developers we do is, okay, we go and swap the area. Okay, you as a landowner wants to exit, I will go and sell this. See, as a landowner, I'm anyways giving you 32% of the inventory. Let's assume I'm building 1,000 flats. Matlab 320 flats you're getting. The 320 flats I'll go individually sell to 320 other people and they'll take it. If that is the case, then to some extent it's safe. But in the pursuit of getting the land, what I am negotiating further, let's say each flat costs some 1.5 crore, 1.5 into 320, approximately 500 crores is what I'm getting. Now for 1.5 crore, I don't have buyers, I'm giving it 1.2 crore. Let's say market value is CL, construction link payment is 2 crore, I've given you 40% discount, 1.2 crore you give me upfront bus and I'll give you a unit. Now, if you're selling at 1.2 crore upfront, instead of doing 320 units, you'll have to go sell 400 units or 420 units. More units you sell, matlab more units ka money went to buy only the land. right? Now you have less units to sell and build, right? Wherein which what happens now, you'll be stressed to build the project. This is a very, very big math problem. So a lot of developers in the pursuit of getting land, right? We go and sell out a lot of inventory at the land stage itself. What, instead of selling 30, like typically if it's a joint development, landowner should get 32%. But now in the pursuit of getting land, instead of selling to 300 apartments, whatever cost, I sold it to 400. So instead of 30% inventory sharing, I did 40% inventory sharing. Now, as a developer, I only have 60% inventory to build out everything and to take my profit. So automatically, if the sales get slower, I'm going to get stuck. This is the fundamental premise problem with one-time payment.
Which is a risk for the investor as
Huge risk for the investor. Let's say as an investor now again, having said that, I'm not telling people didn't make money. People made money in this. Like we ourselves in 2019, 2020 time, we did in one of our projects, Spire. And to be very, very frank, that sort of one-time payment usually helped in our companies to scale, because back in the day we were small, we didn't get capital to buy lands. So we went and bought land, we sold to 100 investors, took that money, given it to landowner, and then we finished. We sold it at 3,500. Now the project got OC, people sold at 10,000. They got a good money. Many other places they got a good money. But again, so that was the right cycle. But later what happened, without what I was telling, financial life cycle, right? You need to understand the financial life. How much of inventory I can put for land, how much of inventory I need to put for building the apartments, how much of inventory is my profit. If this math is gone, you're gone. Right?
But is it a very common mistake that builders
Yes, it is. Now I'm seeing more and more it is. That is what are the ghosts which are now coming out. And another very, very big danger with one-time payment. See, even the one-time payment is when land is being purchased, right? By that time, developer doesn't have all the approvals. So as an investor, you're buying a 3-bedroom flat, let's assume, which does not have approval. Tomorrow, government ka some norms change, right? And the approval doesn't come. Or the developer thought that, okay, boss, in the 10 acres, I'm going to build some 2.5 million square feet, hence I'll do this. What the regulation changed, and they could only build 2 million square feet. That 500 is gone. Now, suddenly you look at the math, it totally goes haywire. So, I would say there is huge risk. I'll not say don't do it or anything, because that purely depends on the investor. Because there will be reward also. Again, there will be reward.
Right, then
there is reward. Yeah. I'm a believer of risk versus reward. But understand the risk well. Let's say now, think about this. So market mein ab inventory bik raha hai like 10,000 rupees ko. There, if you're getting something at 5,000, would it sustain? Think for it. Like you will go, like see, as a buyer, I'll only understand negotiation. I will not. The developer is in distress. A developer, Todina will think, if I sell at less price, mera kya problem hoga? I've already committed to the landowner. I have to give the money. So, as an investor, you go and you negotiate really hard. Instead of selling at 6,500 one-time payment, they're selling at 5,000. Let's assume. What is going to happen? Then the developer has to sell more inventory just to acquire land.
Yeah.
So that's what. So whenever, whatever price you're getting, if it's too much away from the market price, it is huge risk. Understand that. Don't think like, I got 50% less, I'm the best negotiator in the world. You're going to face the risk side of it as well.
Yeah.
So use this data guidelines. What is the market price? What is the one-time payment ka price, and then they should do it. Another very big problem with one-time payment, which we also realized over multiple, at least 1 or 2 cycles, is that after 2-3 years, what happens, not even after 2-3 years, in fact, most developers, the conditions are also not well laid out. When can the investor exit? Let's say now I'm a developer, you purchase with me in one-time payment, and I started selling. You as an investor want to exit. What you will do? Whatever price, let's say I'm selling at 10,000, you will put minus 500. Right, then what happens? The property price starts falling down. Then to beat you as a developer, I'll put 9,500, you'll put 9,000. So what is happening is, in all the projects where there's a lot of one-time payment is there, all of these investors, when they're selling, at some point, 2 or 3 years down the line, they'll sell. That pura phase, developers are really struggling to sell. Because why? One product, 20 different prices. 2 things. One, the new buyer who's coming, for him or her, there are 20 different prices. And the builder being the highest, the investor being the lowest.
There's a lot of conflict.
Yeah. Isse kya ho raha hai? All the other people, the property price is coming down. So these are all the risks of it. In fact, we have faced it in our project. Like something like Spire. We were selling, our investors were selling, and it was a nightmare. I mean, for that entire year, we couldn't sell much. But okay, we had cash flow, so we still built it out. Investors got an exit. We also totally exited. Good for us. But these are all life cycle risks. Probably when doing it, I also did not know, to be very frank. Touch wood, thank God, and thank little bit of our planning that we had funds provision. So even if sales didn't happen, we built it out. Imagine I didn't have that money. I would also be sitting and crying. So it's very, very important for investors. If anything, you're getting too less from the market. If any deal is too sweet, risk also goes up. Now, if you have an investor have appetite for that risk, go ahead, do it. You might get your reward.
But a little later.
Later, or project instead of coming in 4 years can go to 6 years. Or the project might not, if it didn't get approved, it didn't even probably,
then
anything can happen.
Yeah.
But then see, one thing is very clear. If you are an innocent buyer, don't participate in real estate. In fact, don't participate in any markets. Don't participate in stock market also. You can't say that if you're an innocent buyer, how can you say other like if without studying to an exam, if I go, what is going to happen? I'll fail, right? So please read the data, go through all the known information, then take an informed decision. It can be high risk, high reward also, or it can be low risk and medium reward also. Do these things. So these transactions doesn't come under the purview of RERA. RERA cannot help you. Out of humanitarian grounds, RERA also, if it's 1,000 people lost, 500 people lost money, RERA will come and maybe fight.
Yeah, but not maybe one person.
Technically, I'll go to the court. It doesn't come under the purview of RERA.
And we know it takes forever.
It will take forever. And even if it takes forever, I'll go as per the act. Now, court todina ki will give 500 people are feeling sad, I should give them a judge. It doesn't happen that way. It has to happen as per act.
Yeah.
As per act, it doesn't come under the purview of RERA. What can RERA do? Investors losing money is bad for the market, right? So it's important we as developer community also educate our investors more and more. We should not, again, I don't believe in telling this is right, this is wrong. I don't believe in that framework. But this is the information. Let's say now I have 10 crores to invest. For 1 crore of money, I don't mind taking exceptional risk. Then I'll do this risk.
Yeah.
So it's very important. Don't go understand what you want to invest and all of that. So that's what I would strongly recommend. But if you're getting something too good to be true, something too cheap, then you're being taken for a ride. You can be rest assured, and don't consider yourself an innocent. The developer also should be, cognizant to this factor, because in the pursuit of us getting land, we should not keep the investors at undue risk, thereby causing an impact not just to our project but for the market as a whole.
What kind of journey have you seen from maybe 15, 20 years away maybe to now? What is a drastic change you've seen? If you can just give us like a little just. Yeah.
See, basically the 90s was when Indian economy started unraveling after the 1991 liberalizations. And back in the day, we had Chandrababu Naidu Garu as the chief minister. He was one of the forefront thought leader when it came to how to use this liberalization for the benefit of public. Like, how do I increase the GDP in plain sense? So that is when the first wave of real estate started happening in Hyderabad, right? So more companies, event and pitch started coming in. So that is when my dad's company also grew a lot, 90s, because there people were moving from your individual houses to 5-floor apartments, to standalone building. That itself was a very big thing back in the day, right? So that was your late 95 to probably 2005 wala journey and all. If you look under CBN Garu government also, it was very famous back in the Vision 2020 World.
Yeah.
All of us as kids used to listen to that.
Absolutely, yeah.
So in fact, most of those things have happened where we envisioned a lot more corporates moving into the city, infrastructure being upgraded and all of that. Then after CBN Garu, then YSR Garu's government came, they built upon those plans. That was a great thing. Something like the ORR, which today is, if you remove ORR from Hyderabad is gone. Like ORR is the lifeline of the city.
Yeah.
Right? ORR was conceptualized by CBN Garu, but YSR Garu actually implemented it. He didn't go against it. He implemented it. So 2000 from 8 to 12 onwards, ORR was implemented. Right? Back in the day, the real estate around it costed nothing. Now from 2015-16, a lot of the real estate came around that. So that was that after 2005 to 2015 wala story was around, like from a real estate standpoint, ORR was the story. He implemented it. Then came KCR Garu's government. They provided enormous political stability and great climate for companies to come and work, and enormous infrastructure. They further built under the SRDP program. You see all this flyovers and all of this.
Yeah.
Right? And they, a lot of companies started coming in. That gave the 2015 to 25 wala story. Now the next 10-year story is going to happen on two fronts. One, I think RRR, right? And always have customers and always has people from the industry and all. Governments always work 10 years ahead of us. When ORR was being built, people thought, why are they building such a big road there? Kya aane wala hai usse? Kuch bhi nahi, all of that.
I mean, now I can't imagine.
Now imagine life without ORR, right? 10 years back, I know because I've been through that life cycle. I've seen how my father's business changed, where we struggled, as the market changed. So all of that I could see. So government infrastructure is always 10 years ahead. As long as a city has this 10-year story, it will survive. It will succeed, not survive. So the next 10 years ka story, I think predominantly is going to revolve around RRR, right? Because the minute you build RRR, you're unlocking a lot more real estate value now. Right, and lot more industrial sort of, what do you say, factories and all can move there, right?
So
by even making the
it's going to become more balanced.
It will.
Stocking.
It will. Yeah, you'll see a lot more industries moving out of the city into around RRR region, because industries need land much more cheaper. The farther you go, cheaper it gets, and they don't mind going far, right? So that will happen. That will unlock a lot of real estate opportunities around that area. A lot more real estate value will unlock. And next interesting thing to watch out is also AI city. Because AI is the next big technological wave. Imagine a city level thing where a lot of AI related development is happening in that place. The best of the global talent, not just national.
Like how we have Genome. You're talking about.
Yeah, like Genome Valley is what, if Genome Valley is specialized around people with skills in the pharmaceutical segment, right? Now people specialize in the skill set around AI. If that city, when that city transpires, right, with all the infrastructure coming, if a lot of AI companies are coming there, then naturally a lot more AI engineers are going to require, then high skilled workforce is going to come. Always it will look for people, kab hoga. But no, it will happen, because again, back in the day 2010 when ORR was happening, it didn't make any difference to people's life back in 2010. But 2020, imagine your life without that. So same thing. So now RRR and AI city are going to be the two key benchmarks for the next 10 years of real estate. So every city you need one story like this for 10 years. Big story. If you don't have that, eventually city will saturate out. Because see, one good thing is in Telangana, or from erstwhile AP to Telangana until now, all the chief ministers have been, building upon their predecessors, and that's a very good sign, right? So that's what has been giving city the next step. So that way I'm super optimistic. At least for the next 5 years until we list and we have more capital. Hyderabad is my home. All my eggs are in Hyderabad only. So that also has one reason why I have to talk about Hyderabad. But again, whatever I've spoken, I've even mentioned data points. I'll even mention the sources. Please put it in the link so that your viewers also can see.
Definitely.
Yeah. So I want people to make informed, data-led investments and purchases in real estate. If that happens, good for all of us.
You said Bangalore has always been our twin in terms of...
Yeah, our arch rival and our twin, yes.
Yeah. There was a point where people were investing from here in Bangalore as well. Do you think that in the next 10 years, we will surpass?
We have got the seats. By that, what I would see is our cost of living is low compared to Bangalore, and there's a lot of migration from all parts of India happening here. Our civic infrastructure is much ahead. Bangalore civic infrastructure is probably,
I think everybody knows,
one of the not so good ones in the country. Right? Ours is the best in the country. Right? So we have got the right seats. But where Bangalore still has an edge over us is the advanced tech skills or advanced companies working in advanced technology. There are more numbers there in Bangalore.
I think it's one of the startup cities.
Startup city of the world only, not just India. World may also it's some third, fourth sort of thing. After maybe SF4, Tel Aviv and Shenzhen, might be Bangalore. So high paying jobs relatively compared to Hyderabad is still better in Bangalore.
Like the percentage?
The percentage wise. Once that is the only shift we need to make it happen. And I think that's where the AI city ka vision has a big edge to the city.
Because talent is more there? Or because we've not identified, or because people are going there?
People are going there. Why people are going there? You look at all the major tech companies, they're out of Bangalore. Right? Now, a tech startup company pays you more money than your typical Infosys, TCS sort. So, when there's more earning, people from different parts of the country go there. Then you have citizens who are earning more, then more industry will come around them, more houses, more cars, more restaurants and all of them. So Bangalore has more high paying jobs than any other city in the country because a lot of tech startups are coming from there. That is the only chink in the puzzle we have to solve to beat Bangalore, because all other things we are ahead of them. That is the only thing. That is where I feel, sort of a vision plan of AI city. I'm keenly following on the story. Okay, what's next and how things are going to happen, because even we are going to make a city scale development purely on AI skills. So AI is much more advanced than what's happening in Bangalore, right? So if that story unfolds in the south of Hyderabad, then Hyderabad is going to pull that. I mean, the more high paying jobs are going to come to Hyderabad. Hence, a lot of talent is going to come. You see, again, I think now it's a competition of attracting more talent. City scale HR ka talent, HR ka problem hai. Right? Whichever city attracts more talented workforce or high paying workforce, high paying jobs, then comes high skilled workforce, then the economy booms. So it's if you ask me, it's an HR problem at a government scale, population scale HR problem.
I think the vision that you've given is it's very exciting. If it works out, I think it's going to be amazing.
It's good for all of us.
Yeah,
it's good for all of us. And yeah, we want to be now the elder brother. That should be our aspiration as a city.
I think we're on our way.
We are on it because we've got all the other things right. Cost of living, urban mobility, right? AQI is also much better in Hyderabad. Again, see, again, people should not think in absolute terms. People should think relative terms, right? I got 90 out of 100. If I'm the only one in the class, kya maina ragta hai? I got 90 out of 100, but 10 people got more than me. Then I'm 10th and I'm not first.
Yeah.
So we need to think relatively. Prices have gone up here. That's true. Prices have gone up more in other cities. Affordability wise, still we are better. But yeah, definitely I think any things we do which is going to impact our affordability negative direction, that is make us less affordable, is a threat.
But do you see that happening in the next 10 years? I
don't know. I mean, we don't even know, right? Something around FSI and these sort of things have an impact on the city. They have some pros, they have some cons.
Yeah, because but I don't have that your
perception that low FSI is good. Again, I'm somebody who's spoken a lot.
I have to think of it in different perspectives.
Okay, I'll tell some data points here. Yeah. At the risk of maybe getting some harsh comment, but I'll definitely say. Right? See, Bangalore has an FSI of 3.25 and 0.6 what you can buy from the government. So, matlab 5, mota moti 5.
Yeah.
Right? That is, so 5 FSI, right? And Hyderabad does not have FSI per se, but Hyderabad definitely, unless your land is abutting a 6-lane road, that is a 100 feet road, you can't build 30 floors and 40 floors. If your land is abutting a 40 feet road, you can only build 7 or 8 floors. If your land is abutting a 80 feet road, you can only build 15 floors. Only if your land is abutting a 100 feet road,
there is no
cap. There's an airport wala cap. Sometimes airport plays the ultimate cap there, right? But most west of Hyderabad, utna problem nahi hai, right? If you look at that, so Bangalore also, in that case, builders are building around 8 FSI. So we're building, Bangalore is building 5, we're building 8. We're building 3 FSI more than Bangalore, right? Now people will think, okay, less density, matlab less traffic. They'll think that, na?
Yeah.
Now take urban mobility metrics published by the government of India. What is the time it takes to travel urban, like average speed for you're traveling in the city? Bangalore is worst in India. Bangalore in 1 year, in 1 hour you can travel 19.7 kilometers or something.
Walk it in Bangalore.
Yeah, right. Hyderabad is the best in India. Now we have the highest density. Why is it that the best? So first thing, one needs to know. There's a lot of theory around this on global level also. Is that definitely high FSI. Planning has to be much better, right? In our case, we have a lot of big roads. We have a lot of 100 feet roads in the west of Hyderabad corresponding to any other micro market in the country. Not just in Hyderabad, not in the country. In the country, a single micro market doesn't have so many 100 feet roads. It has highest.
I must say the infrastructure
is great.
Yeah.
Right, point number 1. Next point number 2, what happens? See, why is it that Bangalore may average, again, I've mentioned earlier, the affordability is low because now naturally there's less supply. What happens? Price go up. Price go up. What's happening?
I didn't look.
For the same 2 crores, you will get 2,000 square feet here. In Bangalore, you will get 1,500 square feet. Or for matlab, you are going to have as a consumer lesser space. Is that what you want? Point number 1.
But I think we also have an advantage because we have a lot of land.
Why do you think Bangalore doesn't have a lot of land? That's also a landlocked city only. It's not like Bombay. Let's not compare with Bombay. Bombay is landlocked. Bangalore is also not landlocked. Hyderabad is also not landlocked. Why do we think Bangalore doesn't have land? Bangalore has a lot of land. It's not a land ka problem. It's not at all a land ka problem. It is the problem is other end. If you are charging more, right? If you're capping the supply, naturally demand will go up and prices go up. Let me take one very interesting example. There's a lot of content around internet and all. Bombay may it cost one SFT is 1,50,000 square feet or 1 lakh square feet. And recently I've seen Hiranandani sir talk that boss in that 1 lakh rupees per SFT, 50,000 rupees simply goes to the government for taxes. And who's paying this cost? You, the buyer. Right? You, the buyer of real estate, is paying that money. So you're paying 1 lakh rupees per SFT, in which 50,000 simply goes to the government for FSI and all these premiums and all, FSI premium. There in which you're only buying a very small house. Your family life is coming down. Right? It's very, very other, and it's not like a 1 + 1 = 2 when it comes to FSI. It has to be thorough. I mean, it's a very complicated subject. Now I'll tell the density increases, so will be the use case for urban mobility, rapid transit systems. Let's say now in one area, 100 people are living. In another area, 10,000 people are living. And the government now wants to put, let's say, people are telling, put mass transit systems. The government is putting a metro. Where do you think the metro will survive? In the place where the 10,000 people or 100 people?
Correct.
Now, if there are 100 people, why will I put the metro? I won't put the metro. The people have to travel more and more in cars, clogging the highway, hence more traffic jam. Take a look at, US. US is a classic case of low density, high traffic jams. Low density, but it's intuitive. We think it's an intuitive science. It's not an intuitive science. Less number of houses, you'll think less traffic. No, less number of houses, your houses spread over vast amount of area. People have to bring out their car because everything is so dispersed. More cars on the road, hence more traffic. And the buyer, will have less space because prices go up. Hyderabad's biggest advantage is less unlimited FSI only if your land is abutting a 100 feet road. In all other cases, we have limited FSI only.
Well,
and in fact, this was even praised by Mr. Amitabh Kant, CEO of Niti Aayog, where he was, I think, on a national level only, he was taking Hyderabad as a great example of how no FSI is keeping this entire affordability thing in check on a relative sense again.
So recently I was talking to a friend, she stays at this high rise, and she talks about everything being challenging, right? Like, let me get into the basic things. Is your elevator.
Correct. Your elevator is crowded. I understand.
Yeah, it takes forever for it to come and for her to actually reach the floor that she wants to reach. Second is usage of amenities.
Yes.
The days that she doesn't get to use it at all. How can that be addressed? Because yes, you've built a high rise, you've given all the amenities, but actually there's a problem.
Correct. Very, very good question you asked, right? So basically, now people have to, as buyers, right, they have to get into the nitty-gritty of amenities. Generally, as developers, when we market amenities, we say 18 amenities or 50 amenities. Number doesn't matter, basically. I can give a chota sa room and call it amenity. You need to start thinking on how much traffic you're building for. Like, for example, if you look as per the government norms, 3% of your entire project area, let's say project is 2 million square feet, 20 lakh square feet, 3% of that should be amenity space, matlab 60,000 square feet. Now what we are doing is we are giving 5.5%, 5 to 5.5%. Naturally, when you increase the density, you need to increase the amenity space also. Norm only says norm will speak at an aggregate level. Na? That is why I need to have a vertical transportation consultant. If I'm typically thinking, what is there, I'll put this many lifts, why do I need a consultant? Consultant has a data of how many flats are there, what is the traffic flow, how many lifts should be there. Which is what the know-how problem which happens when you're building high rises. So, yes, what your friend is saying is right. You don't just need an architect, you need a traffic consultant, you need a vertical transportation guy, you need all this know-how. High density advantages, more affordable for people. Very, very clear. Look at Bangalore, look at much more expensive cases, Mumbai.
There's a lot of buyers. My friend, right? She said, amazing apartment.
But I can't use anything.
No, the thing is before buying, right? So she said, amazing apartment, amazing amenities. But after she moved in, she's like, I could have never thought that there would be a problem like this. And
yeah, that's why you see, you need better planning, Megha. More should be the developer's expertise on the product design and product execution. At least at ASBL, we do our pura design.
I mean, even at a city level, right? Its density does not mean traffic. Yeah. Or no density does not mean no traffic.
No traffic. Take a Bangalore, low density, high traffic. So all of these sort of things. Then I think through channels like you, all this information and knowledge can come out because this is not available. See, frankly, I think my job also as a practitioner in the industry, I want to put out more and more this information to everybody. So let there be an informed decision making.
Yeah.
Without informed decision, maybe people think, oh, density bad gaya, I want lower FSI. Fine. As a developer, I'm not exposed.
You're saying that is not the only solution.
That's not the solution. One, your traffic problem is going to get worse. Next, your housing price is going to go high. Now you're getting 2,000 square feet.
Then you become unaffordable.
Or you have to buy a smaller apartment. So it's all
correlated.
It's all good. Never anything is like 1 + 1 equal. Yeah. It's all linked.
Yeah.
And there is a science called urban spatial economics. I read that a lot. It's an integration of economics and geography and various policies. So if one can read that, they can get a good understanding of how everything behaves. So I would strongly, maybe next time we can do a podcast.
Yeah, sure. I mean, so I've gotten a lot of insight and I think I look at things differently.
Oh, thank you.
After today. And just I want to end it with one final question.
Mm-hmm.
What are the top 3 things that you would suggest that a buyer does before buying, or investor? Yeah.
See, then, boss, I think it's very, very important to get your research right. Right. So, research would in which line? First, look at the market supply. Very, very important is your supply data. Next thing, if the developer is asking too much cash, it's your
Red
risk
flag
should,
maybe.
it's a red flag. It's a red
Yeah.
flag. Next, if you are getting at a price much cheaper than the market, it's a bigger red flag. These 3 is what I'll say. So, make sure you have the supply data. In fact, the first one is not in the supply data. First one is if you're getting anything too cheap, it's huge risk. Next, if you're giving too much cash, it's huge risk. If you read the supply data, if you need to read the supply data well, so that you reduce it. So supply data reading is more reducing your risk, but not like a red flag. But the first 2 ones are red flag. If you're getting something too cheap, I mean, sign up for it.
There's no free lunch.
There's no free lunch.
Yeah.
I mean, you're signing up at your own risk.
Yeah.
That's what I would say.
Got it. Thank you so much for coming, and I think it's a very I would say like insightful, backed with data, and I'm sure the audience are really going to appreciate what you've told us today. Thank you so much for coming, and I had a great conversation with you.
Thank you so much. Thank you so much, Megha. And see, I think what you guys are doing is great because all this information, this sort of knowledge is not available anywhere. And I think you guys are like, taking, sort of, what do you say, protecting the buyer in a way by sharing all this, getting out all this information. And I think it's a big part of us also as practitioners, as builders, as people, part of the industry, to come out and talk more things like this and educate our buyer, right? And once the buyer has all the information, it's up to them to decide what is right for them, what is wrong for them. But yeah, I think, thank you actually.
Thank you so much.
Hopefully it's of some value to your subscribers.
Yeah, I'm sure, 100%.
Thank you so much.
Thank you.